Hi, CF Liu over here. Welcome back to a CF Liu channel. If this is your first time here, don't forget to hit on the subscribe button at the lower right hand corner. But let's talk about today's topic at hand. How to make money via stocks investment, IPO, or initial public offering. Now, I want to explain what is an IPO, right? For those of you who are kind of new in this. Now, you know that when a private company get listed, this is going to be a quite a long lesson. So, just stay until the end. You're going to get a very good perspective in this lesson. So explain what is IPO is that when a private company want to go public listed. Why do they want to go public listed? Normally, of course, it's not for your own good as an investor, it's for a company's own good, which is to raise capital. Now, what is to raise capital? To raise capital is basically to say to raise money. So they want to, take other people's money, like you and me, for a company go public, take other people money, get that money, and get more money, and then in exchange for that, you'll give you a stake in the company, and then they're going to take that money to do expansion and all that. So why people want to go into IPO, and what's the easy way? This seems to be an easy way to make money. Is that, let's say if I'm going to draw a graph over here, and you have this so-called time versus dollar amount. So let's say a company actually IPO at 40 ringgit per share or whatnot, which is quite high. And then if, of course, before IPO, it was this as an offering, right? So what you want to do is that, any banks, investment bank that help this company to go initial public offering or IPO, what they will do is that they will offer this normally in, it might or might not be in your online banking account, whereby you can say that, look, I want to subscribe to 100 units, for example. So you are going to pay like 4,000, right? So you're going to transfer that from your account to, let's say any investment bank inside, your banking account, and then this 4,000 will be gone from your account, and then it's going to be channeled in here. And then, but whether you can buy this company at this IPO price, whether your 4,000 can get this at this, is actually uncertain, because whether the company publicly listed, they raise a certain number of shares or units. So if there are more people that actually fighting for the same number of units or shares, then essentially not everyone will get this at this price. And it could be a good and bad thing. Let me explain. But just so that what people are expecting when you want to buy a stocks price IPO, and before IPO, they normally come up with something called a prospectus, whereby because this company previously private, when you say private, their profit and loss, their cash flow, their asset liability is not known to anyone outside the company. But now you want to go public, the issue of prospectus. It means you look at the prospectus, and then you decide whether this is a company you want to invest in. So therefore, if you think it is, or some people might not even care about prospectus, because what they expect is that how they make money. You go at 40 ringgit, and a lot of people would have an impression that 40 ringgit is the absolute lowest price. It's starting the IPO price, the lowest money, the lowest price that the stock will have, because after IPO and then the stock over time will go up. So basically you make money by supposedly you're buying at the lowest price. But over the years, we have seen that not every company that actually so-called get public listed or IPO essentially have the price just going up like for infinity, right? Some might even drop, after IPO, and it dropped to whatever amount this is. So this is how IPO works, and how you can profit from IPO, which is for veteran investor. Like maybe if you're a veteran investor, this is nothing new for you. But if you are a new investor, this will be something a news for you. So if you really think of that way, even if you are a very sophisticated investor, so basically this is what I call as a non-sophisticated investor thinking. You could be investing for many years, but if you still depending on this to actually so-called make money, then I got news for you, that is less and less true. Why? Because let's look at what happened for, let's say, Facebook. Like, everyone can relate to that, right? Let's say if I look at Facebook, and if I look at the time when the IPO, as you can see over here, the IPO price was at, I think it's what, at 38 or something. Okay, 38 or something. And then after, actually a few months after Facebook got IPO, actually the price actually dropped. You can see over here. So of course, if you have long holding power, then it actually goes up. But most people, you know, the non-sophisticated investor, they are just wanting to go in here and then exit here. But unfortunately, if it drops, then basically you are losing money. So before I continue further, I take another example. In this example, I'm talking about Uber or Uber, okay, the ride sharing service, which is no longer in Malaysia, by the way, and I know, but they are still big in US and other those developed country. So a disclaimer is that before continuing, I'm not recommending you to buy or sell any security, any stocks, and I have nothing to gain for any company, any stock that I discuss in this video lesson about Stocks IPO. And if you make money, that's good for you. And if you lose money, please, I am not be accountable. I'm not accountable for you losing money. This is not a recommendation to buy or sell. And definitely you should treat this just as an entertainment purpose. And if you understand this, just click on like below, if there's a like button on Facebook and on YouTube. Now, that being said, I want to really, today's IPO is just getting way out of hand. And why I say that is that I make this lesson in the early 2019 when, you know, Uber actually announced they are going IPO. But yes, these two sore points that that we see when, you know, we look at Uber prospectus filing before they go IPO. They always have this prospectus, right? So what happened here? Let me show you here, right? And not this one, but this one, you know. Now Uber has this, they are seeking what I call is Uber 1 point. So they are seeking a valuation, as you can see over news over here, between a valuation of 90 billion to 100 billion USD, which is a really big IPO. No, even though from US standpoint. But here's another sore point. It's like Uber is actually losing up to 1.8 billion a year, because when they issue a prospectus during IPO, they have to disclose that. So nobody knows whether Uber was making money or losing money, but when they want to go public listed, it actually says it's losing money. Okay, and yet it's seeking a valuation of 100 billion USD, but it's losing money 1 billion, you know, a year. And then if you see another news over here, it says that in the IPO, the company itself, this is not what I say, the company itself in the prospectus says that it unveils that the IPO with warning that Uber may never make a profit. Okay, it's quite a big statement for a company to say that, but thank you for the honesty, Uber. But here's the thing. A company that is valued at such a high price, is making losses of in billions of year, and then, you know, they admit that they might not seeing in any foreseeable future they'll be making money. So what is the point, right? Let's just go back to here. What is the point? Why they want to go IPO? Let me actually change the color of my pen. So the thing is, you might be asking, what's the point, right? What's the point of them going off? What's the point of IPO? All right, the thing is, if you're losing money, you better keep it to yourself, right? But then if you want to actually, most people, when they want to go IPO, it means that they're already making money, they are financially stable, financially solid. But for Uber, it's no. So why, right? Why they want to go through that hassle and go public and open themselves up for so many scrutinization? What is the point? And I'm going to tell you one point, is that when a loss-making company like Uber is so big, is making IPO, is because of the early investor want to cash out. Simple as that. Now the thing is, let me backtrack a bit on you. Normally, company want to go IPO because they want to raise money, but for startups, right, like Uber or many modern day, you know, Silicon Valley startup, or even in Southeast Asia, we're talking about Grab and all that. The thing is, they have no problem raising money. They can just, you know, you always announce in the news, they suddenly raise some money from some Saudi Arabia funds, some money from certain pension funds, some money from, you know, a Japanese guy, you know, SoftBank, Mayososhi or whatnot, Son or something like that. The thing is, they don't need to get public listed to raise money. So why they want to get public listed when they are still losing money? So it doesn't make sense, right? So I'm going to tell you what is the sense over here is for early investor to cash out. In case you are more of a visual person, it is a way for early investor to cash out, right? Okay, let me put it that way, maybe in a simpler terms, right? So I'm going to change my pen to this color, blue color. So now imagine in 2012, right? If you are an early investor in Uber, and imagine at in 2012, right, back in the early days, Uber is valued at only 1 billion USD. Okay, just imagine this. And then let's say if you buy, this is you, right, and you buy 0.1% stake, which is equivalent to a 1 million stake. So you actually pump in money to Uber, right? Because they are valued at here, so you are having a 0.1% stake. So, but your investment amount is 1 million. So what happened is that now, all right, 1 billion. Now they have actually okay, hold on. If I get this correct, 1 billion valuation, which is now they have become 1 billion. They have become 100 billion. Okay, and which is actually 100 times more, right? 100 times more. So what you have now is that 1 billion become 100 billion, so it's 100 times more. So your 1 million also you have to multiply by 100 times because you're early investor when Uber is still a private company. So 1 million you times 100, you become 100 million. Okay, so what happened is that your stake from 1 million become 100 million. So 1 million become 100 million. Now if I'm talking about 2012 up until 2019, right, and I'm talking about 7 years. So in 7 years, something that grows from 1 million to 100 million, how much is that? So I'm going to jump right into this you know, financial calculator, and then to say that you invest 1 million, and then the future value now you have 100 million in a period of 7 years on an annual basis. What is the rate? You are actually having a compounded annual growth rate of 93%. So let me highlight this for you in yellow. So from here to here, this is essentially 93% per year for 7 years. What are the two? You cannot imagine what are the things that you can get you 93% per year for 7 years. Of course, during the 7 years, it is locked, meaning that you invest 1 million. Now, you will obviously go public listed in 2019, but what if it doesn't get public listed? Actually, your money as a private investor, you invest in a private company, as long as it doesn't go public listed, you cannot cash out. And as long as you cannot cash out, your money is there. It's just you know, a paper gain or paper loss until it goes IPO and you cash out. All right, so you have to bear in mind that during these 7 years, your money is actually locked when you're investing in a private company. So what happened now is pretty interesting, and why I say so. Let me change my color to blue again. So you know that in let's say in 2012, and then you have in 2019, so let's say your valuation was here, and then it's like growing very rapidly, And then you know that, you know, kind of in this area, the growth might have slowed. All right. I'm just an analogy, and you know, it's getting saturated. So what happened is that if you are a private investor which has invested at this point of time, you know that this company is growing very fast, but now the growth has slowed. So before it actually hits the ceiling, what you want to do is that you want to cash out, because you absolutely you do not want it to go downhill. Then you only cash out. So what you will do, if you will actually gang up with other early investor in this stage, and you will actually pressure the company to go public listed, even though it is not profitable yet. Okay, so you will actually, yes, you will actually gang up with other company, and you want to cash out because you want to sell, right? So the thing is about selling is that once, like I say, once now you hold a stake because you invested in the early days before it become public listed. So when it get public listed, you can cash out because your shares become a share that can be publicly sold in the market. So imagine if you have 1 million, then you now it's valued 100 million, your stake, your 0.1 stake, right? Your 0.1% stake. 100 million you can sell in the market, and then there's other people that will buy your stake, because in the stock market, for someone to buy, it must be have something to sell, and you want to sell, there must be a buyer. So if you, this is based on a greater fool theory, right? If let's say for a graph, let's say for example, even if this is a stock price, what happened is that if you buy here and then you want to cash out here or cash out here or whatever, when the price has, the value or the price has appreciated, you must bank on what I call as the greater fool theory. And this is not a theory, this is very real. Greater fool theory, that means that in order for you to be to sell, there might be a fool, a greater fool than you, that can still see that the price that you want to let go of your stake or sell of your stocks and whatnot, any investment, property and all that investment, there must be a guy in the street that think it is still a reasonable price to buy this from you or buy from us. Okay, capiche? Good. So the thing is, after, imagine if, I mean, I am a Uber investor 1 million and I have unloaded 100 million. Of course, I've already got my money. Now other people are holding, you know, what used to be my stake in Uber in this sense. So what happened to whatever happened to them in the future, whether the price drop or whatnot, whether Uber go bankrupt and all that, that's not my business, right? I already cash out. I already got 100 million, which I can move on to invest in other things, right? So this is the thing. Like I said, the money, like people always say, the money is made when you buy. It's not when you sell. When you sell, that is not where the money is made. So now here's the thing, and this is so-called a mental bias that I see every single day. Everybody, let me tell you the truth, everybody thinks they are smarter than everyone else when it comes to investing. Everybody thinks, nobody thinks they're stupid, because if everybody think they're stupid or fool, they would not invest. So everybody who invests, they are think, you know, especially when it can making a quick profit. Now you might want to jump into IPO and make a profit because you think you are smarter than everybody else, right? You just hope that you just IPO, then the other people are stupid, they only buy after the IPO, and then that's why you can actually make money by selling your stake to them, right? You buy at the lower price and then you sell high, because you know, these are the, here's the thing. By the time you hear this now, when it comes to IPO, that is where all the hype, right? Where the hype is, you know, the market is full of hype, especially when there is an IPO, right? And there's a lot of excitement over in the market, right? So excitement is a human emotion. So people get very excited because they see this opportunity to make money. So when you get excited, it's an emotion, you become emotional, and this, even though you are not emotional as an investor, you think Uber or what IPO price is a share price, a fair price to go in, you might come to a point whereby you still bought it at a price whereby it's what your pay a price is what is supposed to be value at higher than what is supposed to value at, because of this old excitement. Even if you are rational, imagine in the stock market, not even a stocks IPO, right? Excitement meaning that people, a lot of hype creates a lot of excitement. A lot of excitement means that people actually focusing their attention. They want to get into the investment because they see the future actually will go up. Then so there are more people and buy and buy and buy. So you actually drive the price up, right? So you actually drive the price up. And then that price, even though if you're a rational person, because overall the market there's a lot of excitement, there's a lot of hype, and it end up you are also paying a high price because you cannot make it in time to buy at a low price anymore because the price actually go up so fast. So imagine this excitement is really, you want to actually make money from IPO. Actually a lot of non-sophisticated investors, they are actually banking on excitement or hype to actually invest. Imagine a fund manager of any regulated mutual fund or ETFs and whatnot, and just sit around in their room, in the meeting room, and then they just say that, oh, I think this stock has this, we don't know about the fundamental, we don't care, but there's a lot of this excitement going on for this stock. We drive the price up. I think the excitement is still there. Now the excitement starts, so you better get in so that we can tap on this excitement wave to actually so that the price goes up. And then what happened is that next month they're going to review that again, and they said there's still a lot of excitement where people are buying, so we don't care about the fundamental, we don't care about that because there's a lot of excitement. You just want to tap around. There's again a 50% more excitement compared to previously 80%. Excitement has reduced, so we reduce to slow down our buying, but still it's excitement and we want to buy and buy and buy and more until the excitement actually fades away, and then we sell. Can you imagine that? Fund manager actually make this decision? I mean, it could, but again, it doesn't make sense. So that is why if you can hear me say what I say about in the past 1-2 minutes and how ridiculous it sounds, ridiculous, so you know that why buying on excitement is just a ridiculous prospect. And you know that money is made, I want to emphasize it, money is made before when you buy, not when you sell. But in the Uber case, let me review this thing for you, which I'm pretty sure that 99% of you do not know, is that, you know, if you think, let's say if you are an overseas stocks investor, let's say now we are talking about Uber, right? Now imagine you go to Uber, and then this is their IPO price. This is again the time, and then this is the dollar amount now, and then this is the IPO price, right? IPO price. And most of you think that you can make money by going to IPO and hope it will go up, or what if it goes down? Of course, that is what is the uncertainty. But I'm taking a real case scenario whereby for most of you, what you don't know is the money is made. A lot of people out there, especially, you know, the sophisticated investor, they already make the money before most of you even know there is money to be made. And why I say like that? Remember just now I talk about this Uber, when someone was investing in 2012 as a private investor, 1 million between 100 million stake. That example is not a hypothetical example. That's not an assumption, because this is really what happens, not in 2012 but in 2013 or 14, whereby I've helped my clients structure deals to actually invest into Uber, all right, at the point of time before there's any talk of Uber going public, because this is what we call as a private equity investment, or maybe I just want to write it for you. Private equity investment, okay, private equity investment type is another asset class, right, where you invest in non-public listed company. I'm not talking about crowdfunding and all that. That is for the man on the street. I'm not talking about that. I'm talking about really those company that, you know, big company invest, like, you know, Saudi Arabia funds, you know, the pension fund invest in Uber. So we have structured a funds whereby we already invest in Uber. So the thing is, this is the point of IPO. But what most of you don't know is that the money was already made here. So like I say that when people invest in Uber before they even come to IPO, they already invest in this so-called price, right? they already invest into this kind of price. What happened is when it got public listed, here is where all the deals that we have structured for my clients, this is where when it go IPO, you only want to buy here, but for the rest of us, we already cash out over here. So what we are seeing is only here. And what actually happens, the money was made. People already invested in here before there was any mention of IPO, which is why I say that before there was any money to be, before you even know there was money to be made, a lot of people already made its money. And this is not, again, not something that you have 1,000, 2,000 and even 10,000 to invest. We are talking about 6-figure minimum sum to actually invest into this kind of deals. So again, when you invest into here, a lot of people get very disappointing because boop, the price actually fall down. Let me actually explain to you why after you invest, the price actually drop. Just like what you have seen in Facebook, right? This is the trend. And I could even actually have this another company called Snap. What is this called? Snap. What is the Instagram? What, Snap Inc., right? The Instagram app. And you can see that it IPO at this price and then it just keep on dropping. How about company, I think company like Dropbox. Okay, Dropbox. See if I can find this. Dropbox. Nope. Thing. Okay, Dropbox. Dropbox again is a service that you actually use, right? But it just get public listed not too long ago from the time of this recording. Stock price. Okay, so what happened with Dropbox is that IPO price go up and then go down. So what really happens over here, my point being is why the stock price drop is because a lot of people are selling. So who are the ones selling? These are the ones selling. The early investor, the private equity investor. When you go IPO, people are rushing to this IPO. They got that will go up, and then they have to buy more stock if they don't get the stock IPO price. And then early investor here, you remember the 1 million to 100 million stake, they are the one that is selling to this investor that only want to buy in here. That's why when they buy in here and then you already give money to these people who are offloading their stake, and then you hold on to this stock and then it just keep on dropping. Now, of course, I'm being very cynical in this lesson when how to make money from stocks IPO, not what you would expect. But the thing is, I think in the financial world, in modern day financial world, what it is what it really isn't. But you look at a lot of study a lot of IPO in your economics classes and all that, doesn't really make sense anymore, because like I say, people want to go public listed and IPO because they want to raise fund. But for a company like Uber that does not really need to go public listed to raise fund, because they can just raise fund from any private investor. Why do they want to raise fund? Why do they want to still go public listed when they are still making like 1.5 billion losses, which I show you over here, right? 1.5 billion losses. Why? Is because it's the private investor that are already want to cash out. So if these are the things that you encounter, do you want to be, let me ask you, do you want to be a greater fool or not? Okay, do you want to be a greater fool or not? But here's the fact, okay? Here's the fact. And this is not what I say, is that this is the fact. Let's say Silicon Valley, all those tech startup, Uber, Lyft is a competitor for Uber. All this IPO, all right, is a way for the rich to get richer. Now, I mean, you might get pissed at this, but here's the truth, right? The losers are the public investors. So you really have to be smart. Okay, and I'm not actually like trying to say anything bad and all that to anyone, but you see, a lot of those financial, financial writers, bloggers, and all that, and they are still writing things about, the fees are too high for unit trust, and blah blah blah. Brokerage fees are the most competitive, the lowest fee. Really, I mean, come on. If you are a private investor, right? If you are a sophisticated investor, of course, when you want to invest in Uber, there are certain fees involved. But the thing is, all that what unit trust fee, management fee does not really matter. Why? Okay, I'll show you why. I already talked about, right? For, let's say, for this example, if your 1 million stake become 100 million, or even $1 become $100, right? In 7 years, you are talking about 93% gain. So for a lot of people who are just financial bloggers and all that, and they are worried about 5% fees, or yearly 2% fee, or eating into the return, they are just not really looking at the broad perspective of things. They are still a kata di bawah tempurung, if you could understand what I mean. Because for all these high level investor, which we are seeing every day, if you are getting 93% per year, dealing with this, investing in these private equity deals, of course they come with a risk, of course, right, which I'm not going to talk about. There is, but I'm not, for the sake of this video, I'm not talking too much into that. But if you get already the 100% gain per year, doesn't really matter what are the fees, right? It don't actually what we call that, don't actually lose the lose the forest for one tree, or something of that nature, right? So here's the thing, when you only see things from one, and people talk about lower fees, about AI investing, AI or whatever algorithm. Can you imagine, these are the things that even there's no algorithm to actually detect and make decision on this, because these are the deals that still need human intervention to actually close the deal, have these deals, and for people to invest in and evaluate not only the numbers and the figures. Of course, for Uber case in this example, doesn't make sense for 1 billion losses and all that. So I'm just trying to open your mind on all this that you probably didn't know before, right? Now, again, this kind of high level investment options or strategy is not for everyone, because again, we are talking about minimum 6-figure investment over here, like Uber. That's why I say that when these people who have really options, right, they can invest like a lump sum 6-figure or above. That's why they approach still an independent financial advisor or even banker, because they are at that level, they have a lot of options, they want to make informed decision on what are the options they can invest in, right? Now, otherwise, when you have like 1,000, 5,000 to invest, that, I mean, you just have to, when you are playing at that level, you just have to, deal with all those pushy agents or whatnot that are trying, to vie for your business, to trying to make their sales quota and all that, give you empty promises. And honestly, if you just start with like 1, 5, 10,000, it's better, honest comment, to just focus on your job or business, develop your high income skill. It's something that I really truly believe, so you can earn that much of money, so that you can come to a level whereby you can just invest into things like 6-figure is you have more than money to actually invest into different things. That is where we as a financial or any independent financial advisor can meet you there, because you're at that level where you need some really good advice, because you are investing 6-figure. If you only have invested 5,000 and whatnot, I'm not saying that it's not important. I'm just saying that your options are limited, are simple, are straightforward, which is why probably it's not that you cannot afford a service, it's that you just start with what you have. But you should not focus on investment, you should focus on earning more money, income, build up your your credibility or your track record and all that. And I'm being very honest here, because no financial advisor or whatnot actually tell you this, because all they want is agents or whatnot, they actually want your money. They just 5,000, I'll take it, blah 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 blah, right? So that is where you come to a certain level. That is where a very professional and high level independent financial advisor will actually meet you there and to help you impart our knowledge, experience, and skill to you, so you can actually even transcend yourself, even upgrade yourself to another new level, right? So you have to know the dynamics, right, of these human elements involved. before I end this lesson, I'm just going to give you something to chew on. Okay, so you can actually no need to wait until that level before you start investing. I think yes, but the thing is you don't need, like, you know, you don't like, really need a very complex advice. You just need a simple advice. Give you something to chew on, which is what I also specialize in, which is real estate investment trust or REIT. So you have been looking and watching this video. There's a link, you know, there's a moving words below that you can go to reitmethod.com, and you know whether it's equally good. Actually, this is a very universal cater for asset, whether you got 10,000, 50,000, 100,000 or more. I think REIT is a very instrument that is very user friendly and very cater for, you know, whether you have lower amount or even higher amount. Before you move to that level, you want to gain a basic experience of how it feels to be investing your money in the asset and into the market. And a REIT is have that right kind of balance whereby it's safe enough. It's safe enough to actually get you started. It's not too complicated enough to get you started. It's safe enough so you don't get traumatized, so that you can slowly upgrade, get the basic and upgrade to a higher level of investing. You know, deals like what I've covered in here, how to invest in stock IPO. You don't want to start with stocks IPO because that is, you know, high risk, high return kind of thing. So you want to start with something safe and all that, and still make very consistent return, you know, outperforming, you know, or even on par like EPF 6-7%, 8% per year. That is really easy peasy. So you want to check out the link below, and that's all I have for you in this lesson. So let me see if I miss out anything or not. I think that's all I have. So that being said, if you click like, if you find this enlightening, and smash that notification bell if you want to get notified when I publish lesson like this, and subscribe as well. Just click on the button, you know, somewhere, you know, on Facebook or YouTube there's a subscribe button, or see first. And finally, lastly, let me know what you think in the comment section below. So I know I prepared a script and all that. I make a lot of effort to prepare this lesson for you. So I hope this add a lot of value to you. That being said, this CF Liu channel, I'll see you in another lesson upcoming. Okay, have a good day.